Okay, in this video lesson, I'm going to talk about something very important, which is what I call the chain analysis. Okay, and this is a concept I came up with many years ago. It is proprietary. I mean, you're not going to find it out there. If you do, well, probably it's being a student of mine who is copying my ideas. The chain analysis together with the realignment scenario, realignment rules are two of the most, and consolidation way, are the three top additions of my quote unquote, say, knowledge of the financial markets to supply and demand and how the market works. And it really works, I mean, very well, as you probably will have realized by all the trade ideas I'm sharing and the video analysis and everything, okay? So we can pinpoint reversal points with a very high degree of accuracy, and since you have already learned, you should have already learned how to locate valleys and peaks and CPs when these CPs are a little bit tricky, and it takes time to understand the CPs and the valleys and peaks concepts, okay? Although it is very clear that this is a valley and this is a peak and this is a valley and this is a peak, I can tell you that not a single trader I have coached struggled with it. I mean, all of them, okay? At some point they were struggling, mostly with CPs, okay? The clear valleys, nobody's going to tell me that this is a CP, obviously, okay? But they could tell me that this is a valley. And it is not a valley, it's a CP, as you probably remember from, well, you should know. I mean, same range, not a large candlestick body, full candlestick body closing below the previous range established by the first candle. So this chain analysis exercise is going to combine two of the rules or two of the concepts you've been practicing or should have been practicing by now. Okay, because going over the lessons without practicing, just watching the videos and reading is going to be useless. Okay, I mean, you just cannot expect to learn how to trade supply and demand and how the market works and how to locate CPs and valleys and peaks if you do not hundreds but thousands of exercises. It's like reading a book on grammar, on Spanish grammar or English grammar. And okay, you read the book and you know how to speak Spanish or English or Japanese. No way. No way. Okay? So if your intention is like, okay, this is going to be very fast, I'm smarter than all the traders before me, you are completely wrong, because you are the same. You are a human being and you have your limitations. You like it or not. Okay? So after saying that, let's start analyzing some charts so you can see what the chain analysis is all about. We use it for top-down analysis, multiple time frame analysis, and we need to do the chain analysis on every single chart of our sequence, and you will learn more about the sequence later. Okay, a sequence is a series of time frames you choose to sort of they work like GPS signals and satellites. Okay, so the more time frames you have, okay, this is like template, this is the, let's say, monthly, weekly, daily, 4 hour, 1 hour, whatever you do. Okay, so we need to do the chain analysis and the trend on each of these time frames to assess where we are expecting price to go to in the next hour, day, week, or month. Okay, this is top and down analysis. A combination, or the combination between the valleys and peaks, I mean, between connecting consecutive or trend lines, connecting two consecutive valleys and peaks, okay, and the creation of an imbalance, okay, because as you should already know, when we have a bullish trend line, okay, or a bearish trend line like this here, okay, let's do the chain analysis here, and I'm going to explain as I do it. This is the euro-dollar monthly time frame, the first one I have here. I had on my screen, so this is the one I'm using. Okay, so here we don't have anything. This is just the last month was like a doji candle. This month on February 2025 is trying to keep on dropping or rallying. We don't know. This is an decision candle after a very strong sell-off. So This is not even a CP, okay, continuation pattern, because we need a drop base and we need also the leg out with an ERC, and that didn't happen. So we need to continue up following the trace of candlesticks to try and locate valleys and peaks and CPs. So we continue up, and we go here. So we see that this is a peak, okay? And there was a leg in, base, leg out. So we've got a high, higher than this high. So this is a valley too. So this is a valley, drop, base, rally. So this is a valley, we go left, and this is another valley. So the trend line should be drawn like this, okay? So this is the trend line. So as you already know, the break of the trend line, a bullish trend line, creates an imbalance at the origin of the move or at the intersection if there is a CP or a valley right there intersecting with the trend line. But that didn't happen, okay, as you can see, because we don't have a CP. If we had a CP like this or like this right there at the trend line, then we would also have an imbalance there, a supply level on top or beside or the one at the origin, but we don't have that over there, okay? So the origin of the move is, since this is a little tiny candle with small wicks and engulfing pattern, this is how we would draw this one, okay? So we've got this one over here. We've got a supply level responsible for breaking the bullish trend line, connecting two consecutive valleys, okay? Tilted W trend line being connected, okay? That doesn't necessarily mean there is a trend, okay? So that will be explained in the trend lesson, okay? The connection or having two bullish, two valleys connected by a trend line does not mean we necessarily have an uptrend. Moreover, when we have supply level, because in an uptrend, supply levels are eliminated and not created. So this cannot be an uptrend. So the chain analysis is going to combine the break, okay, of the trend lines and the elimination or creation of new imbalances, okay? That's the chain analysis. So everything here on the chart is connected, okay? And you will see as I do a few examples, okay? You will learn about it. So since we know how to draw a trend line, since we know that the creation of the break of a bullish trend line creates an imbalance, that now we have like part of the chain analysis, but the chain analysis requires to know where the closest imbalances are. So I always suggest that when you look at a chart, you should, or time frame, or any asset, you should have at least two imbalances. If it is not all-time high, all-time lows, because if it is all-time high, okay, this is all-time high, imagine there is no price action here, so there is no supply to be eliminated. So there is no point on having or trying to draw supply levels, because there is no, it's like, I don't know, Walmart, okay? Walmart is breaking all-time high, okay? Creating new areas of demand on the weekly. So there's no point in trying to draw supply levels, because there are none, okay? So on the euro dollar, this is what we have. So now we continue, okay? So we can locate other trend line breaks and supply levels, because a supply level could be created or can be created by two scenarios or three scenarios: the all-time high break, okay, all-time low, sorry, the break of the trend line, the origin of the move, okay, and also if it eliminates some demand somewhere, okay. Supply is responsible. If supply eliminates some demand somewhere, and there is none here, this is just an impulse, then this could also be a supply level. So those are the three scenarios for the supply to be created. So let's see here. We've got, let's continue over here. And one of the rules for the trend lines, as you probably remember, is that we can also connect several consecutive continuation patterns, okay? Like here, we've got drop, base, drop, drop, base, drop, drop, base, drop, drop, base, drop. This is not a peak, okay? So sometimes the drawing of the trend line can be very tricky, because in order to draw over an overextended trend line, we need to connect the latest 3 CPs. So here we've got 2, 3, 4 CPs. So you just cannot. It's very difficult to do this. Okay, it's like impossible because you could cut through candlesticks. So it's very difficult to do this because this is only a CP, and this happens rarely. Okay, so when this happens, obviously you just cannot draw a trend line. But that tells you something. If this particular chart or particular time frame is showing in a scenario where you cannot draw a trend line, then something is going on there, and a reversal is going to happen anytime soon, because that means that we are overextended. Okay, it's like stretching a spring so wide, and you just cannot hold it, and then you release it, and it snaps back to whatever the previous supply or whatever was available. Okay, so but if we zoom out a little bit, okay, and we try to locate valleys and peaks, we do have here a valley, okay, drop based rally. This is a CP. We cannot connect, remember. Okay, this lesson is going to include almost everything you've learned. So this is not a valid trend line. Okay, why? Because this is a CP, and remember that we cannot connect a valley with a rally based rally. This is not possible. Okay, we need 2 valleys. But what we can do is that if we continue here, we can see that this is a rally, a large wick, and a drop. Okay, and then we've got another peak over there. This is a CP, 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 everything CP. So the trend line would be something like this. Okay, you cannot cut through candlesticks. That's not allowed. So this could be more or less the trend line. Okay, the origin of the move, okay, always creates an imbalance, and that's let me draw it with the box tool instead of the Fibonacci extension, because I don't want this to extend all to the right, because it was gonna like do like this and it's going to overlap price action, and we don't want that. We want our charts as clean as possible. Okay, so once we have already located that, okay, we have the demand at the origin. Well, the loss should be covered. This is not a pause. This is not a 50% candle. So this is not a continuation pattern. Okay, so the origin is the demand level. We are not talking about placing trades here or the trend or everything. Okay, so this is chain analysis. We have located a trend line break and a demand level, and we have located here a bullish trend line and a supply level. Okay, so where is the connection between all this? Because this is a chain analysis. Each step or each module or chain of that chain, okay, each is connected somehow. Not always, but most of the time it is. Okay, so when we look here, the elimination of that demand level happened right there. Okay, so we need it. This is not the one responsible. This is not the CP responsible for this, because the break already happened there. So the impulsive move comes from here, and then we stop when we see a peak or a CP, and this is a drop based drop. So we draw the imbalance like this. This is a monthly supply level responsible for breaking or eliminating that demand level that was responsible for breaking the bearish trend line. Okay, and that is how it is. So this is what we are gonna do. So what happens after overextension? Price rallies all the way up to the area of supply right there. This area of supply at 122, 12, sorry, is the one responsible for the elimination of that area of demand. And this is what we call the chain analysis. The chain analysis is the use of the trend lines to locate imbalances like these two, and then locating imbalances that break those imbalances. Okay, so that we establish the connection. Okay, obviously we need to score the strength of the imbalance. We need to do top-down analysis. We need to apply the realignment rule before we make a decision. A single time frame is never ever enough to make a trading decision. Okay, you need more information. Okay, it's like you are lost in the woods and you don't know where your city is because your lost is getting dark. So what do? You don't go and dig a hole or go into a cave to know where you are. You just try to find a higher spot on a hill or a mountain, and then you look around and then, okay, my city is over there, so when I go down this hill, I'm going to go left, right. There it is. I am at home. So the same thing with top-down analysis, multiple time frame analysis, and the chain analysis. Okay, so this could be the chain analysis for the euro dollar. Okay, as simple as that on the monthly time frame. If we switch to the weekly time frame, okay, we could do exactly the same thing. Okay, so if we start over here, sorry, if we start over here, this is a value obviously that broke a CP because it's a drop-based drop, and this is a rally-based drop. This is a peak. Okay, so this is a CP, even though, okay, but this candle opened there, okay, this is a peak. No, it is not a peak. The engulfing pattern is one of the most common patterns at pauses or continuation patterns. So this is not a peak. This is a CP. And if we continue to the left, this is also a CP, drop-based drop. This is a 50% candle because the candlestick body is smaller than the 2 weeks combined. So CP, CP. Peak, CP. So we connect two peaks, but again, this is another example where you just cannot connect it. Okay? Why? Because if you do, you are cutting through candles. That is not allowed. Okay? So the trend line is not possible to draw it here. Okay? But we're going to continue doing the trend analysis. I mean, it's weird because usually it is it's not that usual, that common to have not being able to draw trend lines. Okay, and we already came up with two, with the euro dollar on the monthly and the weekly, and it is the same structure, so it's just the same thing. Before it was on the monthly and now it's on the weekly, same thing. So what happens here? So we need to locate demand and supply levels, and you need to, many people ask me how far, the lessons explain it, okay, how far do I need to go back in time, okay, to locate imbalances? As far as you need to. But how this is demand level, whatever that is, going to play out after 3 years? They do. They do. If the rules apply, realignment and everything, top down, they do. And there are not hundreds but thousands of examples posted before the fact on the website to prove it. So just believe it, okay? For now, just believe it. An act of faith. You will learn about it, okay? So, since we cannot connect this trend line, then we need to, when we do the chain analysis, the purpose of it is to locate two valid imbalances, one above and one below current price, okay? A demand level right below this low and a supply level right above this low, or even more, but at least two. One above, one below, so we can establish the range that you will learn later. So if you have a supply level proximal line there, and this is the demand level, this is supply, let's say, and this is demand, this is the range, the distance between the two imbalances. So if price is in the middle, okay, and its demand is in control, well, probably price is gonna rally into the supply level. So this is like low, this is very low, and this is high. So if this is high, you just cannot buy into it. And if price is very low, near to the demand level, you just cannot sell into it. You shouldn't, okay? It's very aggressive. So, having said that, let's continue to the left and locate the closest trend lines, okay? So here, we've got a valley. And it is a valid valley because the high has been broken, and this is a drop-based rally. So we've got our first valley. We go left, this is a CP, rally-based rally, and this is a rally-based rally. All this part of the same structure. We do not have two consecutive CPs, okay? People make that mistake. We have this candlestick establishes a range, okay, and everything is within that range. So CPs, valleys and peaks, swing lows, swing highs, and demand supply levels are made of several usually of more than one candlestick pattern. A candlestick pattern more than 1, 2, 3 candlesticks. Okay, so do not make the mistake of drawing like, okay, this is a CP, okay, and this is another CP. We have 2 CPs. No, we have the same CP made of 4 candlesticks. We have the large ERC, which is the leg in, the basing structure, and the leg out. We don't have, this is not a leg in, a leg out, sorry, it's a basing candle too, because the distance from the open to the close is smaller than the distance of the 2 wicks together, combined together. Okay, so first valley, we continue, and this is clearly another valley. So again, we cannot connect the trend line. Okay, but you're going to see now why. Okay, don't worry about it. You cannot connect the trend line, but you can connect the previous one. Oops, all right. Here, this is a valid trend line. Okay, over here. At the time, it was a valid trend line because we have a valley, the high is there, another valley, another high. So that would be the trend line. But then once this valley is created, we should adjust the trend line to the latest 2 consecutive valleys, but we cannot update it. Okay, so it is impossible to do it. So the trend line is not useful in this scenario or this scenario that we did there. And this happens rarely, but it happens. Okay, so if you draw the trend line like this and you say, like many people say, I'm telling you that many of the traders have coached, okay, but this is a valid trend line, this should be supply, because supply is created also when the bearish trend line is broken by a structure, okay, a price a combination of candlesticks, in this case a CP, that touch with the trend line. So you could say, yes, this is a valid supply level because of that. But no, it is not. It is a supply level, but it is not a supply level for or responsible for breaking this trend line, because this trend line is not the latest trend line. The trend line has to connect always, without exception, 2 consecutive valleys. So the impossibility of drawing that trend line doesn't make the previous one correct. That's not possible. Okay, that is not part of the rules. So don't worry about it. But you might be saying to yourself, but this has to be supply. Look at the strength of the move. It has to be supply. It has to be supply. The trend line was broken. Well, let's continue doing the analysis. Okay, let's continue. So that trend line isn't valid. Okay, and this is good that this is happening, because these things, these sort of things, these scenarios are going to happen, and you need to be you need to have the weapons, okay, in your artillery, okay, to fight against it. But otherwise, your mind will start, okay, yes, I'm going to break the rule this time. I'm going to leave it like that because this is very strong. It must have accomplished something, blah, 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 blah. And then you will convince yourself that this is supply. And in this case, it is, but many times it is not. Okay? So, if we continue going to the left, we are going to detect valley there, and then this is a CP, and this is a peak, and this is another peak. This is a CP. Okay, so since we have a peak there that printed a low lower than the first peak, okay, we have this trend line. Okay, we have this trend line. So the origin of the move, you could say, okay, I'm going to draw the imbalance here. Okay, perfect. Now demand was eliminated by this. This is a chain analysis. Now we've got an imbalance that broke the demand level that caused the break of the trend line. Okay, wrong. Why? Because this is not the origin of the move. Because as you already learned, and we're going to see this now better, okay? I was doing this on purpose for you. Maybe you realize, hopefully you did. The break of the trend line will be considered broken once there is a full or entire candlestick not touching the trend line, consolidating away, what I call consolidating away, sorry. So this red candle over there is the one responsible for breaking, okay? Breaking the trend line. So this is incorrect, okay? On the weekly time frame, this is the origin of the move would be there. This is not the origin of the move. You cannot have two origins of the move, because the origin, the word itself says the origin, the commencement, the beginning of something. You cannot have two beginnings. It's either this one or this one. Both of them, they are not, okay? And the rules are very clear. At least one candle consolidating away, and that happens. So the origin of the move has come from here. So this is the origin of the move, right there, not this one. So this is a supply level responsible for breaking this demand level, not for eliminating that demand level, which is incorrect because it is not the origin of the trend line break. The origin is here and not here. Okay? So, and these are the tricky parts, and that's why it takes time to understand this chain analysis concept, because you need to practice to do hundreds of exercises and not thousands, and that's what I'm doing, the personal online coaching and the live mentoring plans, okay? And you will be posting at least 20 charts every day explaining why, etc., and then after a few weeks you will, okay, now you know it, let's move on to the next concept and the next one until we end up planning trades. Okay, that's the coaching program. So it is this one is complicated. This one happens to be complicated, but it's great because the markets are not going to show you textbook scenarios every time. Sometimes, I mean, they are very often, but when they don't, oops, that's like stay away, okay? Because probably you're going to make a mistake. You will be planning a trade where you should not be planning it, okay? So, and this is the chain analysis, okay? If we continue doing the chain to the left, okay? This is what we're going to have, okay? Continue to the left. We had this trend line. Let me leave it connected, drawn like this. But first, I'm going to disable the snap tool because it's a little bit difficult to draw trend lines. The demand levels and everything is great, but not for drawing trend lines. Okay. Peak. Now this is a valley, clear valley. This is a CP. We don't use the trend line like this. And this is another one, a valley. So now we can connect the valley like this. Okay. And now comes the beauty of the chain analysis. Okay. In this particular example. So what do we have here? We have an engulfing pattern intersecting with the trend line. So we can connect the imbalance. It breaks the trend line. Okay. The origin of the move is also an imbalance. Okay. Poor imbalance. This is better, much better. But I'm gonna remove it. So let me see. Okay. It breaks the trend line and reacts to it, plays out. A new demand level is created. It rallies. And look at this. The supply level was tested once, twice, expecting its elimination, another high, and then it breaks. Okay. And where does it break? I mean, it is the impulsive move that breaks an imbalance, not the basing structure. So you could say, okay, this candle was responsible for breaking that one. Well, no, it was this impulse that ended here, closing here, that was the one responsible. So you would not draw this because the impulsive move, remember we talked about this one. Okay, so let me do this. Let me use the rectangle box tool. And now let me use it again. This is how it works. Okay. So the break happens here. So the candle closes and the imbalance is already broken. Remember that imbalances are broken by impulses. They are not broken by basing structure. It's broken by impulsive moves. Okay. Impulsive move. Not by the basing structure. So this would be like this. So what happens? Then this is a CP2, okay? So this is a CP, all these imbalances, most of them, not all of them, are posted before the fact on the website. So what happens? This CP was the one responsible for breaking this demand level, this line over there, then prices rallies, kisses the proximal line of the newly created supply, and then it drops. It continues dropping and it eliminates the demand level responsible for breaking the bearish trend line. Okay, so what we have here is this. Okay, so we have demand responsible for breaking supply, supply responsible for breaking demand, tested, plays out, and now we have another supply level responsible for breaking this area of demand. Sorry, that was invalid. It was here. Okay, more or less. So this is it. Okay, so this is chain analysis. As simple as that. It's not simple in this scenario, okay? In a particular scenario. So in the end, when you do this chain analysis, this you only do once, okay? If you have never traded the euro dollar, then it's going to take some time here to detect this. If you have experience, it's just like a few seconds. But once you have done this analysis, you don't need to do it anymore. It's already done. You already know that this is the closest area of supply. Why? Because of all that, okay? So if you can, so where is the closest area of demand? So we would have to do the same thing over there, okay? But we're gonna continue doing the chain analysis in another time frame, in another asset, because we've had enough with the euro dollar, okay? Okay, so let's switch from the euro dollar to another asset. This was a Forex cross pair, so let's try, I don't know, stock, like Ford, General Motors, or Visa. Well, this is very easy, all-time high, but we're gonna see it before, okay? All-time high, Visa. This is very easy, okay? So why is it easy? Because it's breaking all-time highs, as you can see, Visa. There's nothing to take into account of, okay? No supply area here, okay, no range or anything. So after breaking all-time highs, as you will learn in other lessons, and consolidation away happens, then we have a new area demand here, the same thing, played out, no pullback, and now the same thing. Very strong rally made of 3 consecutive large candlestick bodies. This is confirmed. So waiting for Visa to drop down there. So at all-time highs, it is very easy to do the chain analysis. You just need to score the imbalances and assess overextension and everything. And if you go to the daily time frame, we are going to see that this is the monthly time frame. Okay, all these candlesticks there make the monthly demand, the weekly demand level, not monthly. I was counting the candle and said, no, impossible to have monthly here. But yes, we have rally base, rally base, rally base, rally. We have overextension, okay? So buying now is not a good idea, but that's another thing, okay? So after it breaks all-time highs, we've got demand levels all the way up there after consolidation away, and this is what happens. There has been no pullback. So as I was saying, all-time highs, chain analysis is very easy. Okay, very easy. You need only to assess the strength to qualify the scoring, the basing structure, the departure, etc., before placing the trade, obviously. But all-time highs and all-time low is the same thing. Okay, so if we go to Airbnb, okay, this is what we have. We've got for example, in the monthly time frame, chain analysis. What is it all about? This is all-time lows, located at about $121, okay? And after consolidation away, okay, this was all-time high, price drops, rallies, we mentioned this trade many months ago, and then the imbalance is tested, and then suddenly it's dropped, it's eliminated, Okay, so which is the structure, the peak responsible, or the CP responsible for eliminating that one over there? This guy over here, because the departure hub starts right there. So this is a Persian pattern or dark cloud cover. You could draw a little bit wider. Okay, so these two are interconnected. Okay, this is the chain analysis. This supply level was responsible for eliminating this demand level, which at the same time was responsible for breaking all-time highs and consolidating away. So what happens? This was created at the end of July 2022. It took quite a few months, and back in 2023 July it took control, it dropped strongly, it took control again a few months later at the beginning of April 2024, and then it dropped again. It printed a lower low. So this is what the chain analysis is all about. Okay, so at all-time lows, at all-time highs, we saw Visa, and it's exactly the same thing. Okay, so these are the things you need to pay attention to when trading, locating or drawing the imbalances based on the chain analysis idea that you are learning in this course. Okay, it is crucial to understand the power of supply and demand, the power of chain analysis, consolidation away, like these candles, okay, and the realignment rules that you will be learning, because those three connected are very powerful and will allow you to locate imbalances to trade with months in advance, regardless what people say out there. Okay, so okay, so having seen Airbnb and Visa for all-time highs and all-time low scenarios, let's take a look at another stock that is not that easy, because obviously these are the best scenarios. I mean, you could say, okay, I'm gonna skip all the intermediate or complex scenarios where there's no clear trend, there's no all-time high, no all-time low, and then, okay, I'm gonna focus on all-time low. I'm gonna focus on all-time high, like Visa. I'm gonna focus on all-time high, like JP Morgan, okay, with new demand levels being created on the monthly, new demand levels being created on the weekly. So I just forget about the others, which is another option. Okay, or Netflix. Okay, we've got new demand levels being created and everything. And say, okay, I'm going to focus on this. I'm patiently waiting for weekly, daily imbalances to take control at all-time highs, on all-time lows, and forget about everything else. So that simplifies everything a lot. Okay, the only thing you will need to take into consideration will be overextension and multiple time frame analysis and realignment. Okay, the realignment rules. You don't need to do any complex chain analysis, because you don't need to. It's all-time high. We don't have any supply levels in control there. It's just printing new highs, historical highs, new high, new high, new high all the time. Okay, that is an option, something you need to think about. Okay, you need to think about this, because maybe that is the type of trading you want. You don't want to do any complex analysis, or you want to really understand how the market works, and you are planning to hold a position on whatever, Ford, General Motors, or I don't know, anything, Caterpillar, Netflix, like this one, or Tesla, Microsoft, Google, Amazon, so many out there. Okay, so let's take a look at a little bit more complex. I mean, the typical, the most common scenario where there's no all-time high. Although now with the S&P 500 and NASDAQ and Dow Jones, and as you take a look, S&P 500 breaking all-time highs. Okay, so with S&P breaking all-time highs, well, that is helping thousands of stocks to keep on rallying. And Dow Jones, the same thing. This is the index. Okay, breaking all-time highs, new demand levels being created and respected. So, but there are many other stocks that do not provide, that are not correlated to the major indexes. And I believe, well, Ford Motor could be one of them. Because when you look at Ford Motors, okay, F on the monthly time frame, for example, you can see that there's low here, another low there, low printed. So this is clearly not like, oh wow, I'm gonna buy. No. Why? Why? Because obviously the monthly time frame, the price action, you can see impulses, bearish price action, impulses, bearish price action, bearish price action, bearish price action, low, 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 low. So who the heck, is going to buy now? It's complicated, okay? Very complicated, or not advised, no, not allowed. Not only complicated, but not allowed. So let's try to do the channel analysis on food, okay? So since we have here peaks and peaks and peaks and peaks, the latest trend line will be something like this, okay? Why? Because this is a rally-based drop, which printed a low, and this one is a rally drop, which printed another low, and we have the tilted M. So we are allowed to draw the trend line, okay? So that would be the latest trend line. The previous one would be something like this, okay? And now you could say, okay, but this another peak here. No, this is a CP, okay? Drop, base, drop, low, low. So we cannot draw the trend line like this. That's not allowed, okay? So as per, oops. So we've got the trend line like that. Sorry. So where are for the chain analysis, we need supply and demand. We need to establish, where is price heading to and where is price coming from, okay? To establish a range, like I said many times, this is supply here, and then this is demand. So where is price right now? Where? Okay, where is it heading? It is heading south, but where? Okay, so that's the reason behind all this, okay? Chain analysis, and to establish a trend. So here, in order to establish a trend and the demand levels and everything, you need to look at the chart and say, okay, where are the strongest impulses? Where is the strongest, the latest trend line? Where can it be drawn? So if you continue to go back like this, then we've got a valley, okay? CP, 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 and then a valley. We would connect the trend line like this with the CPs, the 3 consecutive CPs for overextension, but then the overextension is resetted because we've got this guy over here, a valley. So we would connect this valley with that valley over there, okay? Something like this. The origin of the move, as explained in the rules, will be supply. So we have established at least one supply over there, okay? So if price continues dropping, and there is no supply here, there's no consolidation away either, that you will learn, okay? So if I look at the strongest impulses, I need to ask, are these imbalances or are they not? So that's where I need to ask the charts. The charts is like an oracle, the old ancient Greek oracle where, well, people went and then ask, oh, what is going to be about the next war? Am I going to win? I'm going to have children, whatever, okay? So is this supply or not? Okay, is this demand? Because if this demand, okay, then we've got right now demand in control, okay, and we established already a range. So in order to know if this was supply, okay, then let me, oops, that was not the right tool. So this is potentially supply, okay? So how do I know that this is supply, okay? Because if this is a valid supply, then this one CP over here is the one responsible for eliminating the supply level. It paused, and then the impulsive move eliminated that supply level. But in order to know if this is supply, this is a little bit more, not complicated, but takes more time because obviously there's more price action on the left, so you need to find out, okay? So, and you might ask me, why do I need to go months and months in the past, like 2009, and now we are in 2025? You have to, Believe me, it works really, really well. This is how the imbalances are being created and respected. And even though these imbalances you might see this one as, wow, this is back in 2009, but this is the origin of the whole move, and it will probably be a larger time frame, 3 months and 6 months time frame, okay? And we are expecting a strong reaction from there. But that's another thing, okay? That's for long term. It's explained in the course, in the long-term course, okay? The power of the bigger time frames. So, and okay, if the supply. So I'm not going to explain like a methodical way of doing it visually. If that was not visually better, okay? But this is going to be like there's no way to make an error here, okay? Type of thing. So I don't do this, but a long time ago I did, and sometimes I have to do it because I need to know, okay? So an imbalance is not eliminated by the basing structure. It is eliminated by the impulsive move, okay? So if the basing structure, the proximal line would be drawn like this, I would draw like a horizontal line there, okay? And another horizontal line right where it stopped, okay? So in this process from here to there must be some demand eliminated in order for this to be considered a supply level, okay? Because a supply level is created when it eliminates demand level on the left or it breaks a bearish trend line, and there is no possibility of drawing, there's nothing broken here, okay? So this is not demand. So demand necessarily needs to be within this range in the past. Make sense? That's the way it works, okay? This is taking like longer to do. It would have not taken that long when price was here because we could be seeing that price action over here. So for now, it's okay. We have two candidates because as you can see this within these two lines here, we have two impulses. This one and this one. So if any of these two impulses are demand levels, then this should be supply. Because these impulsive move over here, this sell-off would be the one responsible for taking out or eliminating any of these two potential imbalances. So now we need to go right, to slide it right, okay? We zoom in, and we have two potential imbalances here. This one and this one. That could be demand levels. And oops, why? Okay. And responsible for eliminating the that demand of being eliminated by that supply level right there. Okay. So what happens here is the same thing. So okay, and sometimes gets that complicated, but it's not that often. Okay, because we need to do a lot of work. Okay, usually when you see price action like this, that strong, it almost always is an imbalance. Okay, so the thing same here. So in order for this to be demand, some supply should be available somewhere here, there, and for this to be demand, some supply should be here. Okay, because this could be supply, but it wasn't broken by this. It was broken by this. Okay, why? As I explained before, because price. Let me draw this like this, because the break of an imbalance is accomplished by the impulsive move. Not by the basing candles. So if these candles stick over here, these two candles would have been, if I draw this like this, okay, and the imbalance would have been something like this, the two basing candles like that, then the impulsive move would have been responsible for eliminating that supply level. But in this case, that didn't happen, okay, because the impulsive move happens after the candles, the basing candles, the two 50% candles break, eliminate or go through the distal line, okay? So this is demand, single candlestick, so we draw it like this, and we have the only thing left here is that this one here could be supply. Okay, that's the only thing left for now, or that this is supply here too. Okay, my eyes already did everything here with a trend line. Okay, and you will be able to do that. So I know that this is supply. I'm not sure if this is supply. Why? Because the impulsive move ends here. So in this little tiny range over here on the left, we should have some demand. I don't know. I don't need to do it, because I know that here. Okay. One sec. That was our extension. See here. Okay, here. We've got like rally, 2 peaks. Then this is sometimes it gets this complicated. Okay. So this is what we have. Okay. So since this is what we have, this is demand at the origin of the move, then we've got another supply level over there. These are weak. This is very weak supply level. Sorry, demand level. This is very weak demand supply level too. But that's something you're going to learn in the scoring lesson. Okay. And this is demand, responsible for breaking that one. You might. I'm showing you a complex scenario. Okay. This is not that complex, but 4 happened to be, and I wanted you to see it. Okay. So, because this is what the chain analysis is all about. Okay, so trend line break, weak demand level is created. After many candlesticks, the imbalance is hit. We don't know, maybe the 3 month, 6 month supply level has taken control. We can go long, we expect this elimination, and it breaks. Okay, so the impulsive move starts there. So supply level weak as well. This is weak, expecting its elimination. Weak, expecting its elimination. New ever demand, it breaks this high, the distal line. Weak, expecting its elimination. So this is the one responsible for breaking it, the impulsive move, and it plays out. So we eliminate this one. So now that we do this, okay, this is how the chain analysis works. Okay, this is a complex exercise. So in this scenario, so now what do we have? This is connected. Everything is connected. You see, everything. This is not support and resistance. Okay, and this is the imbalance. Why? Because the impulsive move of this basic structure was the one responsible, that supply level that was responsible for breaking this demand, and then this one to this supply, and this one for this demand that was responsible for breaking the trend line. Okay. And this is how it works. Okay. So if we continue doing the chain, we're going to have, this is a valley and this is a valley. So what do we have here? We can connect the trend line like this. Okay. So the origin of the move is the supply level. And what happened? Look at that. Supply level, very strong. Okay. This one is strong. This one is weak. Weak. Eliminated. Okay. So that supply level takes control. I mean, it was created, look when? May 2011. And then in 2013, June, 2 years later, the imbalance takes control. And it is the one that plays out. Look at the strength of the balance. Okay. So it plays out. And it takes control a few times, it distributes, and then it shoots down. Okay. So now that we have done that, okay, look at that. We have drawn a very old imbalance that played out really well. So so let me finish, okay, because I saw this one. So since this is demand, so we already found, okay, learned that this is the demand responsible for eliminating that area of supply. If we extend it like this, you know that this demand level, we don't know if this is demand, we don't care, okay? Since this is the demand level happening or being eliminated within this range, which is the one that is contained within this impulsive move, this sell-off, then this impulse here should be supply. Okay? This should be supply as per the rules. So if this is supply, then this little guy over here is demand. So we eliminate all this for now. Okay, so make things more clear. And we see that the demand level is now in control. Okay, so the demand level is in control, but obviously there is no trend. Okay, so we have this old monthly supply, which is also a 3-month supply level right there. And we can see that it was eliminated right there. Okay, it was trading at almost $19 per share, and then very strong rally, and then price drops, and after that. But the elimination happened there. So we go back in time and we stop when we see a valley or a CP. This is a valley. So this guy over here is the one responsible for eliminating that area of supply. So we remove the supply and this is what we get. Okay? So the origin of the move is supply. The intersection of the trend line break is also supply, but it's not touching it by a few ticks. But we can see that this imbalance here has been eliminated there, so the impulsive move happens here. Okay? So single candle with small wicks, we draw it like this. We eliminate this one, and this is what we get now. Okay? We eliminate this one and this trend line. And what do we have right now? As you will learn in the trend lesson, 2 peaks plus supply eliminated, we've got a downtrend. Okay? So, and this is how it goes. So, as you could see, I had to go all the way back here, but this is a very, very specific scenario where you have to do this, but usually you don't have to do any of this. Okay? But this is as complex as it can get. Okay? But it is not what usually happens. But it helps you to understand that we had many imbalances that were created years ago and they play out really well. Okay, so we are expecting price to drop down there, probably. If we take a look at the bigger time frames, okay, and we delete everything. So right now we've got the 6-month demand almost in control. Okay, if we take a look at the 3 months, the 3 months is a little bit lower. So probably what's going to happen is that 4 is going to drop down there, and from there we're going to have a very strong rally. Okay, the same way we would have expected from this guy over here, but it just didn't pull back. Okay, but I believe there was a bigger time frame demand level on the 12th there, and it played out. Okay, or this one over here. Okay, and I could continue like this for hours because this is like crazy. So single candlestick. Okay. So trend line break, all-time highs broken, demand level, and then it rallied. This demand level was created when? Back in 1982. I mean, wow, 30 years ago. It dropped and it plays out. So you just cannot ignore this, my friend. Okay, it's very, very important to know where these imbalances in the bigger time frame, and this is also explained in the long-term big time frame course, the power of the big time frames. So the thing is, it is very, very important to know what's going on. And if we go to the weekly time frame here, then we are going to see something else happening. Okay, so if we start, we can see here very strong impulse. So is that a supply level? I don't know. So, but if for a supply level to exist, we need a bullish trend line broken or demand eliminated. So this should be either demand, this one here, or this one here, for this to be supply, or we should have a bullish trend line. But I can see that we've got a valley, and we go left, and we've got another valley. So yes, it is supply. Okay, and we've got a pretty strong supply level over there, with the monthly in a downtrend and everything. So that would be nice. I mean, look at the strength of that impulse. I mean, in 2 candlesticks, it dropped like crazy, almost 40%, 40. And this is a mess, okay? But we also have the power of the chain analysis somewhere else here, Okay, so what do we have here? So we have like another valley with the tilted W, okay, and this is what we have. Okay, there. Another trend line, okay? This is a CP, so it cannot be the origin of the move, okay? So when you do this kind of thing, so here we've got a peak and a peak. Another trend line. And this is the demand level. So when you do the chain analysis right now, we've got that this guy over here, a supply level at $14 per share, was responsible for two things. It was responsible for breaking the trend line, okay, with a full candlestick minimum, consolidation away, and then also it eliminated this area of demand, which was the one responsible at the origin of the move for breaking this bearish trend line, connecting the latest two consecutive peaks. This is ACP, we cannot use it. This is ACP, we cannot use it. We use two peaks, clear ones, obvious ones, okay? So this is how it works. So in the end, okay, what you get here is this one here, an imbalance, a supply level in this case, can be responsible for breaking the trend line or an opposing supply demand level, or both at the same time. And this is even more powerful because it was responsible, it accomplished more than the typical imbalance, okay? So in the end, you would end up deleting all this, okay? And now you would show the latest trend line. We've got a peak here, and we've got another one here. This would be the picture of a downtrend, after all. It didn't pull back there, but it will probably continue dropping until it eliminates this one, remember? So we would have something like this right now. This is what you need to have, okay? Only this on this chart. And all this, you come up with this based on everything I have said about the chain analysis, okay? You don't need to go that back in time to know that this is a supply level. I mean, you look at the weekly time frame, you draw the trend line, oops, that's it. You don't need to do all this. But where is the closest demand? Closest demand is this one, and this one was a tricky one because we needed to go on the monthly, at least we needed to go like very far back in time, okay? But on the weekly, it's very simple because it's obvious, okay? It is very, very obvious on the weekly. So this is it, and I can see, yep, perfect. So this is for four. We did euro and everything, and Visa, and this is more or less what you're gonna have to do, okay? And these are the type of things that we are doing in the coaching program too, in the live coaching program, and the with Zoom sessions, and which includes also assignments and homework every day. And you are not going to learn to locate imbalances and the break of the trend lines and everything and the chain analysis and everything in a couple of days, or by reading the lessons or watching this video 10 times. The only possible way you will ever learn this is by doing this exercise not 100 but thousands of times. There's no other way. And if you think otherwise, you are completely wrong, because our brain works that way. We need to do the same thing thousands of times before those neuronal connections establish. It's not that you are, or you could be, like not as smart as other people. I mean, it is the way the brain works. Okay, you should not overestimate your skills, because your brain is limiting you the same way it's limiting me and everyone else, except some special beings in the world that have powerful memory and skills. But well, that's 1 out of 100 million people. And so this is what you need to do. Okay, this is the chain analysis lesson, and you need to do this, and this is why the coaching program exists. And you will be doing this for 2 weeks or a month minimum, and you will be posting 20 charts per day, and I will be correcting you and say, no, this is not the correct line, this is not the imbalance because of this, because of that, blah 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 blah. And then you will say, okay, yes, yeah, okay, I got it, and then you move on to the next lesson, and until you control everything. Okay, and this is it. Hopefully you will see how this works, because this is a very powerful thing. And when you learn more about the trend and the realignment rules and everything, you will see how all the pieces of the puzzle are together. Okay? Have a great day.